Welcome, welcome everyone. Welcome. Hello, hello, hello. Welcome everyone. As you're coming in, thank you for joining us. Great to have you all here. Oh wow, look at some very familiar faces. So good, well, faces, names, to see everyone here. If you want to kick us off in the chat by telling us where you're dialing in from and why innovative finance is important to you. Just a reminder to click that little blue button to put everyone so you don't just send it to Karim and Jensen and I. So yeah, you can just put where you're calling in from and why innovative finance is important to you. We would love that. So great to see all of you. We have a packed schedule for today, so we're going to go ahead and jump right in. We are going to try to cover a lot of ground in a very short period of time, but hopefully that's what you all signed up for. My name is Ani Patton Power, and I am the program director for the Oxford Impact Finance Innovations Program, as well as the founder for the Innovative Finance Initiative, which I will be talking a little bit about later. I have two of my very dear collaborators and friends on the line today as well. Karim Harji, who is also the program director for the Impact Measurement course, amongst other things, and Chintan Panchal, who is the founder of RPCK, which is an impact-focused law firm. So we are going to kick off by talking a bit about what innovative finance is before we start getting into all of the fun pieces about how it is growing and expanding. So I'm going to start off here. We are going to be using Mentimeter during this session, so I will be sharing the link in the chat as well as giving you a QR code. But don't just think you're going to sit back and listen, because we have approximately 5 different times we are going to ask you for information, and we're really looking forward to getting it from all of you. So I'm going to go ahead and share my screen here and just do a quick intro. From the faces and the names that I see on here, I'm pretty sure that almost all of you have heard me do this before. So I apologize, but it will be very quick. Here we go. All right, so what and why of innovative finance? So innovative finance is, from my definition, is an approach to funding enterprises and interventions that create positive social and environmental impact. It looks to use all available financial and philanthropic tools to support these enterprises, and when the right tools don't exist or work, it creates new ones. The idea being that there is a significant amount of capital available in the world, as well as a significant number of nonprofits, businesses, projects, entrepreneurs that are looking to really build really interesting products, platforms, and organizations with that. But there is a real missing link between those two things. And some of the key issues include different life cycle needs, different parts of the growth life cycle for organizations, a mismatch of what's available and what's actually needed, distribution of what's actually needed, as well as standardization around impact measurement to be able to make decisions with appropriate data. So how we generally think about funding in the impact finance world is that there is a funder and they have a specific type of funding. There is a private equity fund that is doing investments using equity checks, looking for $5 to $10 million equity checks to write. They look for enterprises and interventions that meet that mandate to be able to create outcomes. The innovative financing approach is actually starting with those outcomes to look at what types of funders need to be around the table and what type of financing is actually fit for purpose for these outcomes, and what types of enterprises and interventions then need to be engaged to be able to, or created, to be able to really meet these outcomes. And it's a pretty significant shift to the way that funders think about how we reach social and environmental goals. Over the years of doing this, you've developed a bit of a process around how do we think about what fit for purpose looks like, starting with the issue areas and outcomes, engaging with stakeholders. And this is those of you that are, which are a lot of you familiar with systems thinking, really involves a mapping of what is needed in the space and understanding what that is, understanding the problem and the solution landscape. So, why is this still an issue? Often we just think money, and that's sometimes the case, but actually, generally, it's more of a larger thing about resources. And so then identifying what resources are currently available, either through capital in your own organization or that you're working with, or other types of leveraging of funding, other types of support networks that exist to be able to then understand what opportunities you have to really use innovation, whether it's business model innovation or innovative financing tools, to be able to design fit for purpose capital, whether this is products or platforms or deals or funds or approaches to nonprofit financing. All of these things then are developed with the essentially starting from the end goal in mind. So that's me. I'm going to now switch off of here, doing a little switching back and forth. Now I'm going to now ask Chintan and Karim to opine a little bit on why you believe innovative finance is growing the way that it is. Chintan, can I start with you?
Of course. Um, thank you for that great kind of overview, right? Essentially, what I think you're describing is the building of a new system for capital to flow to places where it hasn't flown naturally before, or where it hasn't been efficient in terms of providing solutions that we need in society. I think that it's working because that underlying premise is sound, right? That the markets, the kind of systems will naturally work if they have the raw ingredients that they need in order to thrive and kind of grow naturally, right? And the work that we're doing in innovative finance is coming up with innovative solutions to kind of clear those blockages or build new pathways. And I think that it's growing because we've proven that it works. Now, it's challenging. There's a little bit of trial and error involved, but at the end of the day, the thesis is sound, and there have been a number of proven solutions that have really borne out in the space.
Makes total sense. Karim.
Thanks, Ani and Chintan, and hello, everyone. I'll just build on what Chintan said as well, and building on Ani's introduction. I mean, we're trying to do some different things around combinations. And innovative finance is, on the two parts around what does it mean to be innovative, which means we are both trying to solve for hard things and also trying to do it a little bit differently. And I would also say that finance is is the primary way we're thinking about being creative, but it also is the mechanism to unlock other non-financial approaches and support. So in some ways, we're looking at the interaction, as we are doing here, between different forms of finance and different forms of human capital, social, and relational capital. And then when we pull that together, we just get some different things that we can do. We're moving beyond, I think, the version 1 or 2, Ani, you've done this in previous presentations, where simply having a conventional structure and then trying to add an impact layer on top of that hasn't really worked. And if we look at even measurement and trying to essentially pull out a set of impact measures from that hasn't worked either, because then we're not really maximizing the impact we can get from that or designing for it. When you have different time horizons, different incentives, and then even different approaches to measurement, all of a sudden you can have just some different combinations that are more appropriate to the types of goals that we have. And I think one important point is often previous approaches have really focused on narrow thematic strategies, right? You basically assume you have one form of capital, one well-defined issue, and you'll just figure out a way to scale that. That's just not the case anymore, right? We operate in complex like contexts, but also the things that we're trying are often multi-sector. They require multiple forms of capital. And we're trying to do that in different ways, than just a conventional linear scale approach. And so in some ways, what we're doing is redefining what innovative finance is becoming, not just a more conventional version of let's try find ways to scale stuff in more narrow settings. And I think that's really important.
And I'll just add to that, one of the things that's different about innovative finance is that it is more community-led. So with that in mind, we're going to ask all of you what you think. So why is innovative finance? Why do you think innovative finance is growing? What is driving it? We're going to be using a Minty poll here. So I'm going to put this in the chat as well. But you can go to minty.com or you can scan this QR code to be able to get into that. I think I'm going to put it in the chat. I think I can put it in the chat. There we go. So we will go to the next one. There you go. People are there. So I'm going to go to the next one. I will put and it will be at the top as well. So that was our agenda. All right. What's driving the growth of innovative finance? Sorry, it's not showing me the chat. Must be something different about there we go. Got it. All right, complex needs. So, Krim, reflecting what you were saying, funding gaps, demands from community, creative thinking, complexity, Chen, to your point, new collaborations, financiers involved, brave people. I agree completely with that. It's something that I often say or put that up. It's the need for bravery and courage. Climate collapse, creative thinking. I also love that there's a few that are kind of coming out here, but in general, there's the whole multitude, which I think is quite interesting, and we'll send these out. Failed current VC, foreign aid vaporized. That is a very good description of what is happening to foreign aid right now. So urgency is always also coming through, as well as the funding gap and unrealized potential. I quite like that. I think that's true. We're trying to tap that unrealized potential. All right, amazing. I'm going to leave this up here so you can, or I'm going to take it down, but I'm going to leave it open. So feel free to continue to add, and we'll make some graphics to send out and share afterwards about this. So our next on our agenda, there we go, is the evolution of impact finance. So where have we come from? We'll talk about where we're going in a moment, but where have we come from? So obviously, many of you in this room have seen this before, have talked with me about it. I see this as three layers of impact investing. I'm actually working on, we'll talk about the Innovative Finance Initiative now, but working on an article with Aaron Sahan from Donut Economics Lab around this new idea of impact investing 3.0 from a fund perspective. Impact Investing 1.0, when many of us in the room got in, we were just trying to figure out, could we do good and do well? And we used the traditional venture capital, private equity, and debt structures that already exist to be able to allocate impact capital. Impact Investing 2.0, a few years on, we can do good and do well. There's no intrinsic trade-off. That some of the original ideology within impact investing was, all right, if we do X of impact, then that means negative Y of return from a linear perspective. And that was, pretty, I would say, pretty clearly pushed aside. And so then the thesis became, you can do good and you can do well. We can have our cake and eat it too. Impact investing is market rate returns, and that was, pretty much the predominant theme. We started using a bit more public debt and equity. We started creating new types of instruments like impact bonds and talking about efficient frontiers. I think we are at impact investing 3.0. On one hand, outside of the United States, there is widespread recognition of environmental and social imperatives and financial advantages. We have over $1 trillion in this space, something that many of us didn't necessarily know would happen. And yet, there are systemic market failures that exist in the financial institutions that need to be addressed in structures and processes and incentives. Just because we can have our cake and eat it too, or so we've been told, does not actually mean that it's true. And so this is where innovative finance comes in, and this idea of this mainstreaming that's happened of the traditional financial sector, of impact coming in and being put as a filter over the top of of capital allocation, as opposed to really going into the machinations of how capital is allocated and aggregated. And this is where rethinking investment processes and incentives, as well as structures, is incredibly important. And how I think about this is along those three lines, which is structures, processes, and incentives. And I've been playing around with adding strategies to this. So my beautiful framework might actually end up changing a little bit. But just thinking about that from a structures perspective, and investment structures, capital structures, legal structures, from a processes perspective, sourcing, due diligence, how you manage your portfolio, how you exit, how you govern the organizations, the funds, the portfolios, how you integrate impact into your compensation, into your contracts. And there's so many different ways that we can do this. And there's so many reasons why. And I'm not going to go into all of these because I think a lot of you know that. But the reason that innovative finance has become important, I think, in this space is because we are rethinking whether venture capital is the right tool to be able to scale social startups. We are rethinking whether the very exclusive, one language dominated investment process that's used by most investors sitting in the US and parts of Europe is actually inclusive enough for things that we want to be more community driven. And we are rethinking how contracts are built around impact, including the ways in which people are compensated. So that's my view on this. I'm going to turn it over to Chintan and Karim to talk a little bit here. Did I get that right? Am I turning over to you guys this time?
Yeah.
Yes, good.
Absolutely.
Go.
Do you
Chintan.
want to dive in?
Yeah, Chintan, please.
Yeah, sure, happy to. Excellent. Yeah, so I love that. I love that kind of framework and that paradigm because it also follows how we think, right? So development finance has been around for decades. Philanthropy and philanthropic approaches to solving social challenges have been around for decades and decades and decades, right? And now what we're seeing is that confluence, right? We're bringing the third actor into the conversation, so to speak, right? And that's the private market, right? Those are the kind of private investors, right? They're the ones who are asking the question of, is there a trade-off? Can you have it all? Can you have your cake and eat it too? And now we're at a point where the recognition and the realization that this is complex, it's multidimensional, right? As we've talked about, today, we're building new systems to address intractable historical challenges, as well as new challenges that we are now starting to face as a society. And therefore, the tools have evolved as well, and the philosophy behind design in innovative finance, hence the innovative dimension of what we're doing, right? But the tools of investing, right? Kind of why did we start out as a space thinking about venture capital as the right tool to apply to these situations? Well, because a couple of the elements of a traditional venture capital transaction happen to be present, i.e., oftentimes these were asset light, early stage, high risk investment opportunities. And so I think a number of folks said, all right, well, let's pull off the shelf the venture capital tool and apply it. And many of those deals have matured, many of those opportunities have matured, and now we're starting to say, well, okay, there are meaningful limitations, right? Kind of applying venture capital to a company that exists in a market that doesn't have a robust IPO pipeline, or isn't a place where you have a lot of secondary market players, effectively off-takers, creates a challenge for exits, right? Which then creates a challenge for pipeline, and that kind of reverberates through the system. And so that's one example of a problem-led innovation opportunity, right? Kind of saying, all right, well, these are great enterprises, these are great organizations, these are great entrepreneurs on the ground that are creating impact through the goods and services that they're providing in communities. And they have the philosophy, how can we get capital to those folks? And a lot of innovation has been done in this field of blended finance, in de-risking, et cetera. I think that in many blended finance structures, I wouldn't describe as particularly innovative anymore. And that's a good thing, right? That at one point in time, they were innovative and they were kind of first impression, and they worked. De-risking a capital stack, for example, within a fund structure. And now they're quite widely utilized and we see them relatively often. And so I think that's an example of the evolution that we're seeing. And yet there are still so many market gaps or failures, if you will, of the kind of traditional capital markets in terms of providing for efficient and effective pathways for capital providers to effectively partner with impact creators to provide kind of that necessary oxygen, so to speak, that capital that needs to flow into the system, and of course flow out back in the system. It is a circular loop. So maybe I'll pause there. Karim, I'd love for you to dive in. I'm happy to kind of continue to share thoughts.
As Karim is talking about his, I'm going to put up the next poll so we can, what I put here is understanding who's in the room, which is part of the evolution of finance, and understanding if you have heard of and or used some of these innovative deal structures, the fund structures Tim was talking about, inclusive processes, including peer-based due diligence and other ways of community and kind of centering that, as well as impact incentives. Karim, over to you.
Thanks, Ani. And I'll talk a little bit more about impact incentives a bit later, but I think the point I wanted to build on, which combines both what you said earlier and what Chintan was saying, but from the impact side of things, is that initially we were doing a lot of borrowing and adapting. So it's everything from language and ways of working in philanthropy and the public sector. We had conventional monitoring and evaluation approaches that we tried to just bring to this world of finance and hope that we would be able to actually measure and manage for the outcomes we're looking for. And then, I don't know if you can hear me. It's got a fire alarm test.
Very good. Can't hear it.
Okay. So when we bring in private sector approaches, we're really thinking about standardized reporting, measurement, et cetera. But this is really being driven by different decision making. And I think what we're now seeing is the move from adapting to then really thinking about innovating. Let's use the example of impact risk, right? So previously, philanthropy would say, hey, negative impacts are a bad thing if they occur. Let's actually ensure that people are not harmed by interventions. But with private sector approaches, sometimes if negative impacts happen, we just don't hear about them. They just don't get talked about or reported. What's interesting now is when you bring those things together, as the impact management project had done, and use the language of impact risk, all of a sudden we bring the framing around risk into the work that we do in a much more rigorous and ex-ante way. But then it places an obligation on the investor to actually then report, measure, monitor it in line with what you think is material. And that is not just a shift in language, it's a shift in actually how we work. Because if all of a sudden negative impacts were someone else's problem, but now we're saying it's actually something you need to recognize as impact risk. It's not just negative impacts, it's about, do impacts last? Do they accrue in the ways we hope that they would? Do we need some different ways to think about how we measure relative to conventional approaches? And that for me is such an important shift when we think about how we blend these different cultures and approaches and ways of working. It's not just the language, it's actually shifting the culture and the expectations. When we say what is innovative, it's really about everything from processes to incentives to even accountability for impact.
Yeah.
Really.
Karim,
No. I know you can talk about this forever. We have to move on.
Yeah.
All right. So that is very interesting. I think, Chintan, mirroring your point that more people have worked with funds, innovative funds, but I would consider probably blended finance as a piece of that. And I think Bjorn's on the call, so Bjorn will be very happy to see that there's a significant number of people that have at least heard of impact incentives. And I do think this mirrors my own experience. I don't know, Chintan and Karim, about you, but that processes is certainly the area that is, I would say, the one that has the farthest to go. It's easier to talk about structures. I don't know if either of you have anything to say on that.
Yeah, I think kind of this ties to the point, right? The, these deals and these structures, they live within a broader context. And so, there's traditional market players and there's kind of impact-led participants all kind of participating together. And so processes are, they do lag a bit, right? Because there is a complexity there. So it starts with I think the deep understanding that Grim is talking about, and then kind of filling that out with actual kind of process, like how is this actually going to work? How are we going to allocate risk? How are we going to measure? How are we going to align? How are we going to confirm on a time going forward basis? So I think this is very reflective of my experience as well.
Absolutely. I totally agree. All right. I keep losing the PowerPoint presentation. There we go. All right. So next, we are going to look. Here we go. Navigating the ecosystem. So one of the biggest questions that people ask, right, when they're coming into this space is, how do I find the other people that are doing this work, right? This is not work you can do in isolation. You cannot sit in a room and try and design things for people that you are either not talking to or with partners that you are not engaging with. So, and I think the interesting thing about innovative finance is that it actually is much broader than impact investing. Impact investors are one type of innovative financier that sits alongside institutionals and individuals and corporates and nonprofits and foundations and governments and banks and DFIs. And so there's some overlap, but there's a really broad kind of set of people that are here, and it can be very hard to find each other. At least that's something that I have certainly found, and I know others have as well. Which is why one of the things we wanted to talk about today is something that we have been building, and Karim and Chintan have been collaborators along with a lot of you on this call, to be honest, called the Innovative Finance Initiative. And really it's the goal is to bring together this frontier of impact investing, these innovative financiers that want to design new ways to aggregate and allocate capital to make things more purpose-driven, purpose-led, fit for purpose, all of the things. And so we've been over the last year building out a community. Our platform is not launched yet, so this is kind of, it's very blurry. That was not a very good job on my side. But I just grabbed a bunch of the screenshots, or a screenshot of a bunch of the logos, which you really can't read because it's very blurry. I do apologize about that. But we have about 300 individuals that are part of this community now, and we are launching in a couple of weeks, well, 3 weeks. If the developers were on this call, they would kill me. Not a couple of weeks, 3 weeks. We are launching a platform that is really designed to bring people together. It is going to have normal things like resources and ways to learn more, but then really the biggest piece is this mission hub. And so this mission hub is going to be a way for individuals that are part of the community to form missions, 6 to 15 people per mission, and they can be learning, exploring, building. They can be a group of foundations that want to learn more about how to do redeemable equity deals together. They can be a group of family offices that are really interested in alternative exits. It can be a group of technical experts that want to get together and build an AI agent that helps people find the right expert for what they are trying to build. There's a wide variety. There's really, the sky's the limit. And what IFI will do is provide the convening, pulling the right people into the room, as well as the facilitating and being able to share the learnings. Everything will be built transparently and as public goods while they're on the IFI platform. And we very much see this as an incubator. So things will spin out and we will build public goods that will live on beyond what the 5-year initiative is for IFI. So right now, I would say it's quite difficult to find the people you need to find. It can be a trial and error, but we're really hoping to be able to just make that a lot easier and to be able to work together more quickly and more effectively to be able to build the things that we all really know need to happen. And I think that's really important. I'm going to now run a poll. I'm not going to send it over to my favorite people. I'm going to run our poll here, and then we'll move on to the next. I think we will. Why do I keep losing everything? Where did the Mentimeter go? Oh dear. All right, maybe we'll just skip that one and we will go on to the next piece because I have lost the Mentimeter. All right, so let's go on to the technology and innovative finance piece. Corinne, can I ask you to kick us off with what you see as really interesting opportunities in emerging tech and others in innovative finance?
Happy to. Thanks, Ani. And I just put a link here to Signal from 60 Decibels. I really think this is the kind of thing that is super interesting as an example of how we've evolved this idea of technology and the integration within how we think about impact, not just measurement, but really how it then informs our decisions as investors. So, many of you know 60 Decibels. A lot of what they initially were doing was around saying, what if we rethought the way that we looked at collecting data in a more conventional reporting sense, but really asking people, customers, beneficiaries, users of different kinds of products, services, and interventions, how did they feel about what they received, what they did, what the kind of immediate and perhaps even over time, longer term effects of different kinds of impact investment, social enterprises, and other kinds of activities look like. And using technology to do this at scale, both at price points that were perhaps a bit more affordable, but also to get more coverage and broader samples. After doing this for now multiple years, to be able to then have this database that says, we now see some trends around what it means for different kinds of organizations who are delivering different products or services to be, in a sense, rated by their customers and users on different measures of impact performance. Well, as an investor, this is the dream, right? You want to be able to understand impact data in ways that are actually providing context, nuance, and variation, but also the conventional language we like to use is benchmarks, thresholds, and disaggregated data. So this, I think, is an example of what sophistication looks like, is when we move to this, let's have technology inform how we collect and analyze data more efficiently, to now thinking about what is the relationship between all of this data and how we make decisions, and what can we do by not losing the context around measurement, but also bringing a more real-time feedback loop into our work. So as opposed to having measurement inform better data collection and reporting, measurement can now help us inform capital allocation and a more direct feedback loop around patterns of, should I be allocating more capital to organization X if I say I want to serve segment Y? Or if this region in particular has had a particular kind of financial or economic shock, what are the 2 or 3 institutions that have responded in ways that don't only provide short-term outcomes, but also have durability around outcomes? These are really interesting questions. What institutions does the impact performance, based on what people have said, predominantly help, let's say, women savers keep saving even through times of financial shocks? Like, we just haven't been able to answer those questions with data. We've been able to hypothesize by saying, let's build a theory of change and assume that the evidence of this kind of product design will help us achieve this kind of outcome. Well, all of a sudden, we're trying to flip that script. And I think that's really exciting.
Absolutely, Chintan.
Yeah, that's great. I couldn't agree more with kind of the data point and using data historically to confirm, assumptions and maybe kind of help bring down biases, but pushing it into a place where it informs decision making, right? I think the other piece of it, again, I think goes back to the kind of systems creating, dimension of this, right? And that requires a high degree of coordination and collaboration. And so initiatives like IDFI, right, Ani, that you were just describing, right, kind of mapping who's out there and who can potentially collaborate, I think is a critical function in order to be able to kind of build these new systems. The thing that, the two kind of other tools that come to my mind are things that, people have been talking about and are on kind of everyone's minds right now, right? So one is AI, of course, and then the other is kind of distributed ledger and these other platforms upon which relationships can be built and can exist and grow, right? And they're both multidimensional, and so they can be really useful tools for disseminating information, for creating opportunities for collaboration, and for housing or providing the platform or the context for those types of collaborations. And so, I think that, let's kind of give one example of kind of AI and kind of the ability to very quickly understand what tools are out there and understand which tools can be applicable in what kinds of situations, right? I think that's a really valuable and important, ability that we didn't have, 10 years ago. And so there was a lot more trial and error, right? Now, the caveat there, of course, is not to fall into the trap of kind of just doing the stuff that was in the past, which is AI is really good at capturing, but to continue to kind of create and push the boundary, which is where kind of that human ingenuity comes in, right? So that combination and that tension between those two, I think, is really important to have. And then, kind of distributed ledger, right? So, I'm not talking about kind of cryptocurrency and kind of the financial instruments, but what I'm rather talking about are the distributed relationships. And so kind of the contracting, the multidimensional contracting that's available, right? Especially when we're starting to talk about distributed ownership organizations, and bringing community actors into the conversation around these new entities and structures that we're building and starting to see. How can you efficiently do that? It is a very significant challenge if we're in a manual and binary world. But now that we have the ability to utilize tools like distributed ledger, we can start to bring in those perspectives, those voices, and actually have them make a difference in decision making as these new organization types are starting to move forward.
I love that that's what you highlighted, Tintin and Karim. I think one of the things that I've learned from you over the years really is this, much more nuanced view of how to use technology to inform and the feedback loops that are required in the design of IMM processes in which technology is enabling. And I think Tintin, to your point, also using distributed ledger to have a really broad set of ways in which we engage, but also contractually engage with a large set. And I think there's both there where we can, alongside things like being able to collect the type of data from remote sensing that is fantastically interesting. And I think we're looking at with IFI and other initiatives that I'm working with is how do we use AI to punch above our weight in the sense of what's already out there and then building what is new as opposed to kind of just recreating what other people have already tried and done. So I think this is so I put a link in the chat. If you're interested, sign up, put your email in IFI. You'll get a notification when we are launching. If you'd like to apply to be in the part of the community, if you are an asset owner or a technical expert and you want to be part of the community early for our beta test, feel free to drop me a note, and I can put actually. I'll volunteer Peter for that. I'll put my colleague Peter's email in there. He doesn't even know that. I'll put his email in there, and then you can just drop him a note about that. All right, I did find the Mentimeter. It was hidden in full screen mode at the top of my slide. So I am going to put this up here and actually ask the last question of who do you see as the key players pushing innovative finance forward? So we already have some answers here. I can put the code in here again, but impact investment funds, ecosystems, family offices. Certainly family offices are one of the players that I work the most with. There's the link again. DFIs, that's very interesting. Family offices, universities. I think universities are certainly play a part here. I agree with philanthropy. Impact first investors. Yes, that is an important, definitely an important element here. Community-based initiatives, intermediaries, certainly. I mean, I think a lot of the really good work, I mean, Chenton, as an intermediary has helped, dozens, I don't know, hundreds of clients does structure innovative instruments. Roots of Impact, which is on the call, 60 decibels. Others that are intermediaries are playing a huge role in being able to build, structure, design, implement these types of organizations. I like totally agree with this. I think impact first investors, family offices, philanthropy, intermediaries, and I'll even give DFIs the credit here as well for being innovative, particularly on the fund side. And then I think there's a whole kind of interesting set of other organizations as well. So on the tech side, what are all of you seeing? I actually see some of the names in the chat and know that some of you are working on some really interesting stuff, which feel free to put links to your project in the chat as well. We'll pull all of those together to be able to share some of that with the kind of 400 people that this email will go out to after. But what are the things that you're excited about? There's obviously lots to be scared about, but let's be honest, all of us have too many bad things happening on a daily basis. So we are going to spend this few moments thinking of things we are excited about as opposed to things we are concerned about. So what are the types of tech opportunities that you are potentially the most excited about on the innovative finance side? AI for efficient. I think you might have gotten cut off there. I'm not sure what Mel is. You can put it in the chat.
Machine learning.
Oh, for MEL. I thought they were cut off. You were, yes, sorry. Thank you, machine efficient learning. Thank you. Yes. Indigenous-led AI. Ooh, that's very interesting. Agricultural tech. I actually do not know what agentic AI is. Could someone put in the chat what that is? Is that just AI agents that are actually, I don't think if whoever put that, if you could put that in the chat, I would love to know more about that if I have that wrong. Automated due diligence. I think there's some really interesting things we have to think about from due diligence processes. I mean, we also have to be very careful that the AI, as Chintan said, is not just reaffirming old biases around due diligence. But I think there is an interesting opportunity to potentially spread diligence processes further. Shared back office services, things that deepen trust. I love that. I think that's really lovely. Healthcare diagnostic, expansion of knowledge, alternative credit scoring, capacity building, user-paid training of AI. That's really interesting, thinking about how do we actually compensate people that are training AI. For deal matching, Jeff has. Thank you, Yakita, for putting in what agentic AI is. I will look it up. So Indigenous AI, Indigenomics Institute, Hannah. That is really interesting. We'll put that in the follow-up. I've not heard of that yet. Anything else here for both of you that pop out before we go to our next one? Oh, systems thinking and innovative finance. So there's some really cool stuff. So Lucas Matarazzo in Brazil has an amazing platform that he's building to use AI agents to do systems mapping. To allow essentially to have the agents will all have different points of view, and then we'll be able to look at information around regions and areas and be able to do system mapping obviously much quicker and easier, and being able to ask more intelligent questions. And I think, Karim, that goes to your point around it's not just collecting the data, it's being able to push further into how we think about and apply the data by being able to do that. DAOs, we didn't talk about DAOs at all. Chintan, to your point on the distributed governance. Excellent. Great. We're doing so well on time. Well done. All right. So I'll stop my share here. And our final one, I think is our final one. Yes. Future trends. what's happening next? So we just talked about technology. Technology is not all that's happening next. Karim, do you want to kick us off? What do you see as what's next?
Yeah.
That was the tagline to get everyone to come and hopefully get them to stay. What's next in innovative finance?
So I'm gonna talk about what's next in the context of things we're working on and have worked on more recently, because this is an attempt to try and not only think about what it could be, but also to describe the starting points and how we can actually move towards that. So I'm going to highlight three things. And the first is how do you incentivize impact in these different structures? It's built on the work that Ani, you did and with some of us from a couple of years ago. Some of you have seen this already, but this idea that if you're an impact fund manager and you're not aligning the structure with the outcomes you're looking to achieve, then maybe you're doing something wrong. But also, interestingly, there's a lot of ways to do this. And I think that the key, and I'll share some of the links in the chat here from the impact link compensation report, ILC structures. What's interesting is it's really not just about the metrics you use or the structure you use or even just the strategy. It's actually about the relationship between them. And I think this is what we need to be able to kind of keep in mind, is that we're trying to think about this relationship, and Ani, as you said, adding strategy to your construct, I think is important, because we talk a lot about intention in this world of impact finance, impact investing, and you have to be intentional in the way that you think about strategy, and then you build out your structures, your processes, and your measurement, as well as your governance to align with that. I think we found that there's actually a lot more happening around how fund managers are being creative with thinking about this relationship between linking impact and compensation, but also the importance of aligning your structure with your strategy, governance, and measurement. And so for any of you that are doing this, there's a lot of starting points here. The second point is similar, but also from a different angle. It's all around incentives, but it's also this question that Roots of Impact really frames quite well, is how do you reward more impact? And we've gone through variations of this, which has been everything from interesting vehicles like social impact bonds, other kinds of outcomes contracts. And I think the Roots of Impact's kind of approach is, if enterprises are really the ones that are most directly responsible for creating or facilitating impact, why would you not reward them on terms that are helpful for them, as opposed to just starting with what the investor would want to see? So in this way, it has a more dynamic interface. And really, it is based on both trust and rigor, right? So the idea that we're in dynamic contexts, we have to understand what both sides are looking for, and we have to find more interesting mechanisms to align in ways that don't sacrifice either rigor or flexibility. Now, we're still working through this, but even what Roots of Impact have found is that you can apply it in multiple contexts, both regionally as well as sectorally, and you can think about the ways in which you can bring this in more progressive levels of ambition. So maybe you have a very basic structure that is rewarding outputs, activities, and some outcomes initially, but over time, really begin to think about bringing that to a different level of, expansion, scale, or even depth of impact. And then the third is one of the themes that has come up already, which is, as impact investors, we've all been wanting to really change things. But now we talk about how much capital we're mobilizing. That's really not enough. And I think there's this dissatisfaction with the more transactional orientation, really trying to get back perhaps what the original impact first meant was, how do you be transformative? And so I shared some of this in this Systems Thinking for Impact Investing link, which is some new work that I and some other colleagues have been doing, which is to say, if we step back and say, how are we really getting back to the forest, not just the trees? Can we have different entry points to bring in a systems orientation to our work as impact investors? That changes the way we act and that changes the way we think. But often there are many more starting points than you would presume, and there's many more places to be ambitious that are achievable. And so this work is really trying to say, if you want to optimize for system change, A, you can get started today. B, there's a lot more combinations to work with. And C, you should be doing it with others. And really, that's also the premise on which the Innovative Finance Initiative has been built, which is there's a lot more you probably don't know that already others do. There's ways to find that information, and then there's ways to work together more efficiently.
That's beautiful, Karim. Chintan.
Yes, awesome. Thank you, Karim. I'm going to take a little bit of a different approach. To the question, Ani, keeping in with your directive to be positive, given all of what's going on in the world right now, recognizing what's happening in the world right now and what all of that stuff is doing to a lot of the initiatives, a lot of the kind of participants, players, the beneficiaries, et cetera, in this space. I would say that I also have three points to highlight. The first, in my mind, is Asia. We have a great comment here from Evelyn in the comment box. I just returned from a long trip out to Asia, but not just Asia, also Africa, also Americas. The point there is place-based impact, right? So Asian focused or Asian-based family offices, foundations that are coming in force the impact community, Latin American kind of sources of capital, African kind of source of capital, as opposed to the traditional historical paradigm of US and Europe sourced capital, which of course is significant and historically kind of a large capital base, deploying capital into these other markets. I would say kind of in-market led initiatives. I think there is a huge, obviously opportunity, but there's a lot of really, really excellent work being done there. And I think the opportunity, of course, for European, US, et cetera, based investors and participants is in collaboration, right? So kind of partnership on the ground with folks that are on the ground who kind of have a deep and unique understanding of the needs, the systems, the opportunities, et cetera. So that's kind of point one. Point two is aid. There was that really very accurate comment that we saw, kind of the vaporization of aid, not just led by kind of what's happening kind of in the US, but also we're starting to see domino effects around the world. The opportunity in that, and Ani, you and I have talked about, and you've had some really good and on-point critiques of the way that aid historically has been built out in that whole ecosystem, right? And so recognizing the damage that it's causing and trying to focus on the opportunity that there is an opportunity to rethink some of those paradigms and rebuild some of those opportunities. And it's the people in this community that are going to need to step up and carry that banner forward, at least for the time being. And there's a significant opportunity, therefore, to design thoughtfully what aid and the intersection between aid and innovative finance, what that could look like and what that should look like. And the third, I would say, is authenticity. Another, I think, consequence of what we're seeing kind of in the space is, I think there's a bit of it that's an understandable reaction to things like greenwashing and over exuberance and just the implicit assumption that we can have our cake and eat it too, and it's easy, and it just without that recognition of this is challenging, we're building new systems, maybe it doesn't always work, it's trial and error. And by the way, things don't work 100% of the time in the traditional markets either. And so there's been a set of standards that have been applied in this particular space that maybe have been unrealistic or unfair. But the point, I think, there is to kind of hold authenticity at the center of our work, design work as well as execution. And what I mean by authenticity is kind of having a clear sort of, clear eyes around what are we trying to achieve here? Are we actually doing it? If not, how can we readjust? What are the right tools? And really having a very, very kind of, maybe say a clear sense of who are the winners and losers within these new systems that we're building, and kind of continuing to reapply our kind of creative approaches to making sure that we're actually building the type of systems that we set out to build out in the first place.
Amazing. So while I'm doing my last few minutes, I'm going to put up our final question here, and then I'll be sharing. Maybe Krim, if you could put the links to the courses in the chat, and I'll put the slide up in a minute. So please put up yours. I think it's pretty clear that this is our moment. Either we redesign the system, we take this reset of the vaporization of aid, the changing in political climates, the unease, unrest, the dissatisfaction with the current system, we build something else, or we retreat. And in many ways, impact investing becomes irrelevant. So I think this is pretty make or break right now. And how we react to the changing landscape, and how we facilitate capital, allocate capital, involve communities in that, think very clearly about what it means to build fit for purpose capital, and get that to the people that are doing the real work on the ground, and really think about what do, as Chintan was saying, systems, what is actually being grown by these systems. If we just continue to grow inequality, and we just continue to grow outside of our planetary boundaries, then we will, whether we're impact investors or not, be moving towards a completely unsustainable future in so many regards. And so if it's not now, I don't know when. And I think the good thing about where we are right now is that there's enough work that has been done, that we can scale some of these things that look different to traditional venture capital, that look different to traditional portfolio allocation, that look different. But then there's lots of still room for experimentation. But I think we really do need to think systemically, as opposed to band-aidy, because we've kind of passed that milestone. Karim.
Yeah, and just to build on that, and Joanne has asked a couple questions to us, and ironically, Joanne was one of my first bosses, so for me to respond to something where she really taught me a lot of what I knew early on the first versions of innovative finance, I came across around venture philanthropy and social enterprise. So Joanne, thanks for the question. I mean, the question was really around how do we bring together more asset owners of different kinds and build the stack, but also bring others from outside of this world. I would say the innovative finance kind of initiative and the work we're doing through our courses are the direct ways to do that. Well, we're trying some different things. One is to create a kind of environment that is equally focused on knowledge as well as the relational pieces. Now, and Chintan was saying this, earlier, whenever we do these deals, we're also trying to figure out how we engage with each other and how we utilize the knowledge of what we want to build or what we know has been tried elsewhere. We're trying to make that process a bit less kind of friction filled, or a bit more frictionless in some ways. The other way that we're trying to do this is to say there are often starting points for everything we're trying to achieve. Those may not always be the right starting points, but we have them. And so let's at least acknowledge how we find those and make them a bit more accessible. And then I think the third is to acknowledge that the relationship between different types of actors in the system is as important, as it's almost as much about the how we work as the what we work on. And sometimes when we think about the problem solution framing, we spend a lot of time on the solutions, and many of us are trying to figure out different kinds of framing of the problem to be more systemic, as Ani was saying. And so I think this attempt, when we sometimes hear the words even innovative finance, it can feel narrower, but actually would think, as we've seen on this call, it's much more expansive than just the structures. It is about the ways in which the relational capital, the kind of structures, and the financial capital come together. And that's pretty powerful, because now we're using technology, we're using offline mechanisms, we're actually trying to use AI to surface ways we find information and apply it much more efficiently than we've been able to do in the past.
Absolutely. And if you want to come geek out on any of these things, we have lots of ways to do that at Oxford, which I am putting in here so my Oxford overlords don't stop me from running these things. So we've got the impact measurement program, which Karim oversees brilliantly. We have the Oxford Sustainable Business Program. And then we have my personal favorite week of the year, which is the Oxford Impact Finance Program. So the QR code is there, and you can Google that as well if you want to spend an entire week geeking out with the coolest people in the space, including Karim and Chintan, on innovative finance. Come join us at that. And then there's the Impact Investing Program as well in February. Thank you so much, everyone. So great. Sorry we didn't get to the questions. There was only so much we could do in an hour, and I feel like the number of polls that we did and the number of things we covered was about the limit. So I apologize if we didn't get to many of the questions, although I appreciate Karim doing that. Thank you so much, and we look forward to seeing all of you very soon in person and on virtually. Bye, everybody.